Hi, this is Joe Rabil with Rabil Stock Research. So we're going to talk about the market, some of the shifts that have taken place based on all the volatility. But I do want to take a hard look at the quantum computing stocks. Made a big run up and then a pullback. And let's see just how harsh that pullback was, which ones look the most attractive there. But I do want to start out with a lesson in MACD. And I'm going to do one of my favorite patterns. This is a pattern that I leaned on when I started my own company and I was doing a lot of swing trading. This was the one setup that I really like to look for. So we're going to go through that and then we'll cover some of these other things and we'll look at the symbol requests that came through as well. Let's go ahead and get going. Okay, so I'm going to start out with the XLK. I'm using a weekly chart, and I think all my examples are on weeklies, but I can tell you that it happens on all time frames, intraday time frames. I actually discovered this on intradays, but I've applied it to as long as monthly charts. And one of the things I want to make sure you understand is that I view this as an upper time frame setup. All right, not necessarily a trigger. Very important to understand. If you've read my book or gone through my courses, especially, I think you'd understand what I'm saying. What I'm trying to tell you is that this is the time frame, the setup time frame, or the trade time frame. This is not necessarily the time frame I'm actually going to go and find the trigger on. All right, and I don't use it as a trigger. I use it as a setup. So let's just explain what the pattern is and what I'm looking for is a cross of the zero line, first of all. So this is the zero line here in MACD, all right? And that's essentially where the 12 exponential moving average is crossing either above or below the 26 exponential moving average. So if the black line is crossing to the downside, that means the 12 is crossing down below the 26. And if it's crossing to the upside, then it's the opposite. The 12 is crossing above the 26 to the upside. Now, why is that important? Well, to me, it's sort of a sign that there's a shift in trend taking place. So I almost view this as a center line for the trend. And if we cross to the downside, then we're shifting the trend to the downside. Now, it might not last very long, but we're looking for that, and then we're seeing the shift back to the upside in terms of the trend. Now, if you start to look at the crossover of the moving averages, you see that they're very, very close to where the MACD is crossing. In fact, there's a little bit of a lag because the 1840 that I use are simple moving averages. They're a little bit longer, right? So that's why there's a little bit of lag to the crossover to where the MACD is actually crossing. However, they worked well together. So I like to look for this. Now, let's just talk about these two spots. So we get this move to the downside and then we get a rally after the MACD crosses down. Now, while we're getting the rally, these two lines are still dropping and the MACD signal line is actually crossing down and touching the zero line as well, while this pinches up towards the line. So I'm going to show you the negative one first and then I'll show you the positive one. Now, if you recognize what this is actually doing, we got the MACD kind of stretched away from its signal line, all right? So when we cross to the downside, I'm not necessarily interested in looking at that as a signal because it's too far. It's run too far. It's too far from the moving average and it's too far from the signal line. So I want some kind of a little drift, rally, minor little push to the upside to push price closer to the moving average. And actually confirmation of that is where the MACD pinches in towards the signal. It's the reason why I call it a pinch play. All right. Now, if you're looking at the histogram, you'll see that it's actually going counter. It's below the zero line, but it's going counter to its rallying up. So that's kind of what we're on the lookout for. Now, once that takes place at the moving average, I like to go down to a smaller time frame for the trigger. So if this is happening on a weekly chart, I'm going to go down to the daily chart and look for my trigger to enter to the downside. Now, I do view this as a trading play. If I have momentum in my favor based on the ADX, then I might play for something bigger. But this is the idea behind this. Again, originally when I started doing this, I was looking for patterns where I thought I could trade for a week or two in my favor, a high probability trade. Now, the first high probability point is where we're changing trend and we're getting a pretty good sign that the trend is shifting. So to me, it's a lower risk trade. And then it's doubly low risk when we get a rally counter to that trend or a pullback. So let me just show you a few examples on the long side. First of all, look at what's taking place here. We get a move that's an undercut. One of the patterns, again, out of my course is this undercut pattern that we immediately rally and then come and test the breakdown point from here. It's almost like an inverted head and shoulders pattern, a little bit different, but the idea is when we come back to this area, notice how the MACD is pinching and we have the signal line now rising. Think of the signal line as a trend line, and it's basically saying, okay, we're pulling back to the trend line here. All right, and if that's rising, we've got a pullback. We get our lower highs. I do like to look for three red bars. In this instance, we had a narrow range doji bar at the bottom, and then we get our trading rally. And if you notice, it actually plays again. This time it crosses above. Now, the only time I'm really willing to play it underneath when it's inside the range is, or normally my favorite version of that is when it's an undercut pattern. All right, typically what I'm looking for is the zero line cross, and then we get our first pinch. All right, now we do get another one not far after that. I'm not saying that I wouldn't do that. I'm just saying this is the one that I would lean on the most, these types of patterns going above and below. Let me give you a couple more examples. So we can look at what took place in CF to the downside. Again, it crosses, and then we get three green higher lows, right? And we go back to the moving average right as the signal line is crossing down below and we're pinching up. Now, if you notice what's taking place in the ADX, there's no trend strength whatsoever. Everything is below 25. So you have to play this as a short-term trade. You don't have any momentum confirmation, so you play it for a little swing, all right? Look at what takes place here. Now we cross back above the zero line and we get a pinch. Now there are times when you'll cross above and you just won't get a pinch, so it'll cross over and it just doesn't offer that opportunity, or it might just jet away and you never get that opportunity. So you just want to be on the lookout for a cross, and then relatively soon, almost before the signal line crosses above the zero line, we're looking for that first pullback. We get that, and we get, again, a trading move without a lot of trend strength. Now we're actually starting to get a little bit more trend strength, but when this trade took place, you would have viewed it more as a trading opportunity inside the range and look for a little bit of a pop. Now it did it again. Notice we got red bar, red bar, red bar. See that? Now that was the first time really clearly above the zero line. Yeah, it was a little bit extended above. Probably not as excited about that as I would be about something like this, but it is another opportunity. Let me just show you another example. Look at what Tesla did on its weekly chart. Three red bars right after the zero line cross, right? And then we get actually a gap down reversal pattern right at the 18. And that really was the kickoff move. Then we get another actually a subsequent move where we weren't that far away from the zero line. Still don't have a huge amount of trend strength because the ADX is below 25, but it was the start of a big trending move afterwards, right? So we had the same pattern back to back. Give you one last example just so we know what we're looking for. Let me go back here. Look at this downtrend line. So I want to point this out. If you notice, we broke the uptrend here as this comes up. It rallies up right at the zero line. We get the pinch play. All right. So look for it in conjunction. I go through this in the book and the courses. Look for it in conjunction with the trend line in the two, and that oftentimes that rally back to the zero line in the pinch play coincides with the two and a 1, 2, 3 change in trend. All right, let's go ahead and move on. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on the services page right now. You can see at the top, I've got the advanced trend and momentum courses individually priced for lifetime access. Plus you could buy them as a bundle at a discount. And then also the individual package has about 2 to 3 reports each week, plus a special video commentary each week for that package. Also, if you're new to this approach and you want to just learn more about it, you can start with the book I'm offering at a discount right now. My comments are for educational purposes only. Please do your own due diligence before making any decisions. Now, let's start out with Nvidia. All right, we got a lot to talk about. I'm going to go through some market indices. We're going to look at some cryptos. We're going to go through the quantum computing stocks and then some requests. But what I wanted to cover is Nvidia, because I think Nvidia is the key to the market right now. I think that this is the leader. This is the one that accelerated the market, accelerated the AI space, which has been the leader, and the semis as well. And it's now showing signs of some topping. What I've been talking to my subscribers about is how, even though this made this double top up here at a new high, essentially looked like it's still trending to the upside, the momentum was dying with the ADX not crossing above 25 on these peaks. So to me, this has been a big warning flare. Now, if we go and look at the daily chart, you can see we've had this sloppy, choppy sideways action, but what I want to key on is the 130 area. Now, I know we got above it here and a little bit above it here, but look at how we failed at it here, we failed at it there, then we used it as support, didn't quite make it here, didn't quite make it there, but then use it as support, use it as support. You see how there's a memory here? 130 is a key level here, and look at what just happened. We had the monster gap, and then we rallied up to the 130 level, and it looks like it's potentially failing here. What I want to point out is that if we can get back above the 130 area sometime in the next day or two, then we have to start respecting that this could easily turn into some kind of an undercut and rally, and I think this might survive for now, all right? And I think that would be a really good sign for the market. It's almost more important to watch this one, in my opinion, than looking at the indices at this point, because this is the leader of the market right now. If we turn back above 130, I would respect that, and I think I would also be looking for a market move that would probably show new highs. If we fail here at 130, especially with the way the negative DI popped on this little breakout out of a low ADX condition, then I think we got to start thinking we're going to test this 90 to 100 area. All right, so really key thing to keep an eye on, and I think that would drag down a lot of stocks if it does continue to the downside. All right, let's look at something like this QQQ. What I've been talking about is the same thing that's happening in the Nvidia pattern, which is the failed ADX confirmation on this new high. Starting late last year, we went to a new high in price, but the ADX could not confirm by getting back above 25. Now, it's not a timing tool, that indicator. It's a sign that we want to be on the lookout for a sign of price breaking down, which it hasn't done. It needs to break this 18-week. I think if it does that and it breaks the 500 level, then I think we're in for a much deeper corrective pattern. So 500 is key level to watch on the QQQ. Okay, IWM, while it is holding key support, the biggest problem I've got with this is the relative strength. We need this line to move up and take out these prior peaks here, all right, and get this moving average of the relative strength to turn to the upside. I think if that happens, conditions overall should improve. I do think the key level to watch is this 230. If we can make a higher high with a strong bar to the upside, we'll recover this big red bar to the downside on the daily and make a little higher low. I think that would be a pretty good sign. So that's kind of the first thing I'm on the lookout for. All right, let's take a look at a few cryptos here. We're going to start with Bitcoin. Now, when I look at this, so we had a move. We had a nice turn getting back above the 18-month, and then we had a pullback to the 18-month, which was the pinch play on the higher time frame. And then the lower time frame was the zero line reversal, and this is the trigger time frame. All right, so this is taking place on the upper time frame, higher time frame, and this is the lower time frame. Now, this wasn't right at the zero line, but it was basically, we had one of those right here, which is right as it was crossing. It's hard to see here, but we did have a little pinch develop, and that was a a really nice signal right as it was crossing zero. But then we had a beautiful pattern right at the breakout point and had follow through. But now we've made the move to the upside. It almost feels like it might need to consolidate. Now, if the only way I can trade this is looking at these 2 time frames, and I don't know, there's a lot of volatility. If I'm going to do this, I need this to close above this low bar. I need to get a reversal back to the upside. I think if we do that, we've got a higher low and we have the potential for a move. But I think the only way this plays out in that fashion, breaks out and makes a move to the upside, which could be potentially up towards 150 or something like that, is if NVDA can make it through that 130 level. I think if that happens, then we could have some confirmation here. All right, ETH, I don't like the way this is pulled back. You see how this hasn't made a new high? It failed at this 4,000 mark again. We've pulled back to these key moving average lines. We've got a little bit of overrun on the MACD. So if I'm going to play this, I need more confirmation. I need this to move up and it tests and then turn back to the upside. I'm not breaking the downtrend is not enough for me. Getting back above these moving averages is not enough for me. I'm looking for a little bit more confirmation in this specific pattern versus the Bitcoin, which, you know, it's in a much stronger position than this is right now. All right, I do want to spend a few minutes going through the quantum computing stocks, and I want to make sure you can see the differences that I see when I'm looking at these patterns, because there's about 5 or 6 of these. I want to make sure you can see which ones I like the most. So this is the one that I think is the most attractive, and I'm going to explain why. We had this monster outside reversal bar. Well, that doesn't usually, is not something that I'd be attracted to, but when you start to compare it to some of the other stocks in this group, I think this looks pretty good. So we had this big red bar and we had some pretty heavy volume, but look at what happened right after. Look at the volume that came right back in and turned it right back up, and we recovered the midpoint of this big bar. All right, we've gotten back above the midpoint of this bar. Now, if we can make a higher low and turn back up, I would think that would be confirming evidence and a good sign. So I'd like to see this turn back to the upside, hold these moving averages, turn back up on the daily chart, and I think that would be, a good sign of this taking place. Now, it's also possible this is going to spend more time working sideways, but when I look at this one compared to the others, it just looks like there's less upside resistance in place based on the way this recovered so quickly. All right, let's go and look at another stock, quantum computing, and look at the difference in the way this played out. We had the big spike up, but look at this drop. Now, the volume wasn't as heavy, but the violence of the decline was not recovered, and we failed at the midpoint, and now we're sitting back below that. All right, so we've got the potential for this to turn back up, but look at the way this is played. We could get back above this little interim resistance area, but then rally up and still have resistance up around 15, 16, 17 from the gap down. So it's a tougher play, I think, than looking at something like IONQ. I think I'd prefer the IONQ because if it gets going, I think there's more potential upside. All right, let's look at this D-Wave Quantum. Another one where we had the big drop off and failed at the midpoint. The midpoint's around 7.5 here, maybe 7.5, something like that. We failed right at it and turned down. But look at the volume pattern. Heavy volume coming out, not as much coming back in. But then again, we didn't recover the midpoint. We're going to need to get back above 7.5 before I'd have any real interest in this, I think. So got to be careful. All right, look at Quantum Corp. All right, to me, this is the weakest of all of them. It had this big move up and then it retraced. And I view this, I call this sort of like a dunce cap look to it, where you come up and you got the big point to the top, right? And you make a vertical move. Almost looks like a dunce cap a little bit. And I don't want to be wearing the dunce cap in this situation. So I'm not interested in buying this, this pullback to the breakout area. So how we broke out and now we've retraced the entire amount. Now the volume pattern is not that bad. The volume selling wasn't that bad, but the price action failing at the bid point after this big drop. I mean, this is definitely the weakest of all of these stocks. I just think it's going to take more time to recover from something like this. Also failed at the big round number at 100. Just a little bit more work needed to get this up and going again. All right, last one is the Spaghetti RGTI. Now, this is another one similar to what's taken place in IONQ. We had the big outside reversal bar, but this one didn't have as much volume. But then look at the volume that came back in after we got down here. So to me, that's pretty good buying. And we recovered the midpoint of this bar. All right, so These are really good signs, little tiny things we want to be on the lookout for. I would be most interested in this if this can come back up through 15 again. It does have some resistance up at 20, but again, because we've recovered the midpoint of the bar, it doesn't have as much resistance up there, I don't think. So I'd be most interested in IONQ and then secondly in RGTI. All right, let's move on to a couple other requests. Look at this Abbott Labs. Now, we've seen some nice improvement in certain areas in healthcare recently. But this is a really big base, huge green bar breakout on the earnings. Really good low ADX pattern with the MACD turning at the zero line. We actually got a little tiny little pinch developed right as this was emerging on the bigger time frame, right? And then we had a little zero line reversal with the big green bar kicking things off here. So really nice sign from that standpoint. All right, let's take a look at ADI. A lot of different action in semis. All right, what I don't like about this is we're pulling back to the breakout area, but notice how green DI and the ADX have remained low throughout, right? So we make this move and it looks like a breakout move and something's starting, but we don't have that much strength behind it. So normally I'd say, hey, if we can break this downtrend line and do it quickly, then I have an interest in it, but it makes me feel a little suspect. Now, you could do that from a trading standpoint, but you might be looking at resistance somewhere around 250, something like that. So just be careful if you're going to play this. I think you got to play it a little bit tighter. Okay, let's look at Apple. So Apple still on a longer term time frame is still okay. I mean, we've got a little bit of room where we can pull back and still be above its moving average support, which is in the low 200s. It's sort of sloppy though on the weekly. I mean, the trend, the momentum is strong enough for this to continue, but because of the way this dropped down, and we do have earnings coming. I mean, I could see this rallying off earnings. Maybe it goes up to 250 or 260 or something like that, but I don't really see this emerging out of this and starting another leg to the upside quite yet. I think this needs more time in consolidation before it's going to be ready. Okay, let's do one more request. This Coinbase Global. We had this move to the upside. This looks a lot like more like the pattern in Bitcoin, where we're trying to form a higher low. We need to get above the 300 mark. I'd love to see it be a big green bar. I think if we do that, I think we got to have respect for this because the weekly chart is showing good momentum conditions, both on the MACD and the ADX. The volume pattern also looks pretty good. Thanks for watching today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these MACD techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.